Perfect. So first, thank you for ITF for inviting me to present today. And actually, when I start working on this presentation, I start trying to dig on what the World Bank has been doing on vehicle taxation in the last year. And frankly speaking, not much, right? So then I start digging what the bank did on transport taxation, and it comes to full subsidies removal. But then major reform came on VAT, on pension funds, on financial asset taxation reform. Not much on transportation. It's quite interesting because now with the World Bank, we are trying to do something different, at least in some of the regions that we operate, regarding vehicle financing and vehicle taxation. And this is why I'm going to present some of our findings through this presentation. But let me first explain that probably we need to step back a bit and follow what are the policy priorities today that we are seeing on the low middle income countries, what funding instruments that the government are being used, what are the opportunities and what are the challenges. In this context, so going to just briefly talk about policy priorities, what are the sector performance in transport, what are the needs of the government, and what the funding instrument. I will go a bit on fuel taxation, carbon pricing and government revenues, which I think is quite important to understand how the removal of some subsidies or basically the use of electric mobility will basically decrease the revenue that the government is collecting, how it will affect government revenues. I will zoom into what we are doing in Sub-Saharan Africa on fuel and vehicle taxation. And I will talk about the few instruments that we have been basically, the bank has been supporting about road funds, budget law, specifically to fund transport through the tax instrument that we basically helped to create. I will talk about pricing roads and some selected World Bank initiatives. Right? So in the context that we basically operate, it's clear that the universe of low middle income countries is not the same. It's not homogeneous when it comes to transport policies. Today, we have countries which are upper middle income countries. We have the low income countries. So we can imagine that the policy needs, their demand for transportation is different, right? So it range from connectivity, whether they have access to infrastructure and services. It's also the affordability. It's also the resilience angle when it comes to climate, but also resilience coming to financial, to how the sector will support any reform or how the sector has enough resources to deliver their agenda. The transition to low carbon solutions, local pollution and greenhouse emissions come probably at the bottom today in the priorities of most of the countries that we operate. Still, for some cities that we are working, even in the African context, there is interest to move this agenda, and governments are working on that. Obviously, there are different investment needs, and service needs. So it's not only the infrastructure which is missing, right? It's focused on the passenger, it's focused on the freight, in the interurban and in the urban space. But also, we are talking about today about vehicle taxation. Let me just say that in many countries, basic urban infrastructure is missing. Sidewalk, crosswalk, bike lanes, traffic signals. So basically the needs they have, so has to be the policies that will come for funding the design of the instrument will basically have to take into account the needs of these countries they have, right? It's also true that there is insufficient or inexistent public transport solution and poor urban planning, which is leading to informal public transport solution, which at the end, we know what the difficulties in taxing and trying to get the revenues from that sector. And there is a growing motorization rate in many of the countries that the bank operates. So basically, we have some issues on the planning. We have issues on the supply of the provision of public transport, which is leading to a growth of motorization rate. Most of the economies, when it comes to policy instruments, the difficulty that we are facing it depends on the country, depends on the region, right? But it's the informal economy and the missing taxation funding opportunities, right? So if we want to focus on vehicle taxation, we need to understand basically whether these vehicles basically are registered, whether we can start taxing vehicles. It's also true that in those countries, there is a higher marginal cost of public funds. So which in general, the literature tell us there is a preference over user fees rather taxation. But when we use user fees, we have affordability issues, right? So, and then some of the government prefer to use cross-subsidization among users in a way to avoid taxation. And naturally, when we talk with Ministry of Finance, they have the decision whether they will start taxing asset or usage. we hear Rex talking about Australia, but sometimes government basically has some difficulty in taxing the use of the transport, right? Using taxing fuels, they may be able to tax the asset. And in some sectors, when the government can start taxing, this is the case, taxing basically, when this is the case in Africa, they try to focus on areas or services which are, for them is easy to tax. This is the case of aviation, and this is the case of vehicles. And we'll develop it further this. But what is also important to know is that more tax revenues does not necessarily imply more transport resources, right? Talking with some Minister of Finance, they say, well, the bank can help to develop some tax system, but this tax system will be basically the revenue, the collection will be distributed by us according to the budget law. It does not mean that the sector will count with more revenues. Then we try to define charge system, which is not necessarily a tax system, but sometimes it's not constitutional. And maybe there is a lot of pushback from the Minister of Finance to get into these extra revenues. I do remember talking with the Minister of Finance of Chile when he was interested to know basically what was the contribution of infrastructure to growth, because they will claim any surplus in taxation due to growth because of the infrastructure. The Minister of Finance say, no way, this is revenue for us. We are not going to share specifically with the Ministry of Public Works. And this is because there are multiple competing demands for public funding. And at the same time, many of the governments that we are working today, there is still an incomplete decentralization between the fiscal revenues and the spending, which basically complicate, make more difficult to extra revenue that we can bring through vehicle taxation to reach those who need it, in the case of local authorities or national authorities. Ironically, more funding does not imply more implementation capacity. And there are some cities which count with royalties, which basically has limited capacity to use this vehicle taxation, basically to build the infrastructure to provide the service that they need. They have revenues from this royalty, but they don't have the capacity to deliver. So we know that there are many instruments that we can use. We cannot basically look at only vehicle taxation in general when the bank basically focus on the funding side, not on the financing side, but on the funding side, we have evidence that how different instruments will work, right? But it's true that we have a lack of systematic data collection on funding from different instruments. So basically, beyond some data that we have from a few countries, even from IMS or OECD, there's limited information of what basically we can bring, what these instruments are bringing. The other issue is that when we try to decide or we try to work on defining a new tax reform, and in the transport sector, we need to basically to consider what are the implications of taxing one area and what is going to be the implication on the other. So land value capture, road and public transport cannot be basically taxed without having into consideration what they say the general equilibrium effect that basically will imply and whether it will affect the mobility and the access of the population. When it comes to fuel taxes, the best database that we have today is coming from the OECD, and this is good data basically for us to understand where we stand. So it's true that there are still opportunities in many countries to rise fuel taxes. Still, there is a long way to get into electric mobility. There are opportunities to reduce subsidies in some of the countries, right? Probably it's not a good timing to go and say to the government that we want to increase fuel taxes in the country that maybe there are opportunities to make it, right? We need to find the right timing, right? But what is important to know is that tax collection from fuel, oil and fuel taxes basically represent a large share of government funding. I was trying before preparing this presentation, trying to basically have another chart showing how much it represents fuel tax collection from the total public spending. And in some countries, it may be up to 10% of the total spending. So what is interesting is that on average, similar tax revenue collections as a GDP per capita in high-income countries and middle-income countries. So maybe the possibility come on a specific case-by-case country, right? So it's not that we can apply these high taxes in all countries. In some cases, fuel taxes rate could be consistent with carbon prices. This is not shown in this graph, right? But for some countries, they have high fuel taxes. But what we have is scattered evidence that between 40 and 80% of the tax collection return to transport as investment and affordable fare in low middle income countries. So a big chunk of the tax collection is not being used in transport. And this is something that probably is also common in many other developed economies. When it comes to carbon pricing, so there is very limited today implemented in low middle income countries, a few exceptions in Latin America and East Asia and South Asia and South Africa, right? But most of the countries that we are seeing today, they are trying to basically to cope with getting funding for the government through carbon pricing. This is the case of Argentina, Chile, Uruguay, Colombia, and Mexico, who has been working with them in implementing this carbon pricing scheme, but not necessarily the revenue collected on this carbon pricing go back to transport. And let me now deep into specifically into vehicle taxation, which is probably the main topic of this presentation. And this is the case of the Sub-Saharan Africa. And we have good reason to focus there. Together with UNEP, we are working in a way just to basically to prevent the import of used vehicles on aged vehicles, basically from Europe, from the America, and from Japan to Africa. It's a matter of emission, it's a matter of road safety, right? So, but what do we know in terms of vehicle taxation and fossil fuels, right? So, and what I'm presenting here is not a work of the World Bank. It's a good recent paper on vehicle and fuel taxation in Africa, right? But that gives you a good picture of basically what the government are doing, basically to get the revenues from the asset and from the use. So, and there are a few remarks that I want to bring. One is that taxes on fuel and vehicles are already a significant revenue raiser. So if we want to say to governments that, well, basically, probably you want to focus different, or you want to address this through a different perspective, for government that represent a major revenue in terms of how the government gets funding, right? So what is interesting is that Sub-Saharan Africa country on average have official full tax rate which are lower than those in more developed countries in nominal terms, but higher relative to the GDP per capita, which shows basically that those countries basically they have also a problem of poverty or problem of revenue basically. Why this effective fuel taxes rate can be lower is because subsidies, because they still apply price stabilization and under collection. And this is when we insist, so with many governments sometimes, is when the opportunities to remove the subsidies, they should take these opportunities. When it comes to vehicle ownership taxes are on average 1/4 of developed countries in nominal term, but much higher as a percentage of GDP. Again, those countries basically in terms of ownership of taxes, vehicle ownership taxes, they have lower taxes compared to more developed economies, but higher as a percentage, showing again a problem of revenues. With the bank, we are financing a BRT in Dakar. The BRT will run on e-buses, and the concessionaire will probably pay 3 buses and will get 2, because the third bus will be paid in a form of taxes, in a form of VAT, ownership taxes, purchase taxes, and import taxes. So that shows how high taxes are being used in Africa to finance the government, to fund the government, but also prevent fleet renewal, prevent in a country where still the level of motorization is lower compared to more advanced economies. But when it comes to public transport, when it comes to trucks, when it comes to a specific use, that is a main barrier for this country to have access to a good, a high quality fleet. This is why the evidence that exists is that import and purchase taxes on vehicles are only a tax category where taxes are higher in Africa than those in high income countries, right? Both in cash terms, but also relative to the GDP per capita. And this is because the government basically perceive vehicles as a luxury good as well industrial policy concern. So there's still the opportunities in Africa to do some fine tuning or some major reforms. Some of them may be basically to adjust this vehicle taxation as basically as a function of complex systems that consider CO2 and sometimes Euro standard. Today, the ECOWAS region, the West African countries, have signed an agreement to basically to move to some Euro standard, to adopt some Euro standard fuels, right? But still, the taxation is not basically associated to this type of fuel. And this is why when it comes to reforms, defining reform depending on the country that we work, basically, there are still opportunities in Africa maybe to increase the effective tax rate on fuels when it's time, right? Not probably not today. introduce or increasing taxes on vehicle ownerships in the countries they don't have. There are other solutions, obviously, which in more advanced economies are being used, right? So parking charge and other congestion management scheme. But there are opportunities to work on the current structure and to rebalance, maybe to reduce import duties and maybe to increase ownership taxes in a way, basically to facilitate fleet renewal, right? And even, as I say, maybe just to bring more sophisticated vehicle taxation scheme in Africa, where basically instead of moving to the flat rate that they apply, which does not discriminate whether they are high pollutant or not vehicle, right? This is why the World Bank today is working together with other multilateral banks, tries to develop a financial institution that will focus on fleet renewal for very specific industry, which is public transport and freight. But one of the main barriers for this is taxation. So we need to find a way that basically we facilitate the access to concessional finance or blend financing for those countries in a way that we bring at the same time reforms that can basically address taxation. Another topic that we have been working, we need to understand basically what we do, how we maintain the roads. We hear that the distance-based charges, vignette and so on, have been used in many countries, right? Or are planned to be used. So the bank has been proposing and has been adopting in many countries the use of road funds, mostly in Latin America and in Africa. Basically, one of the reasons is that, again, there was insufficient funds for road maintenance. Even that there was field taxes, the field taxes go to Ministry of Finance. The Ministry of Finance, basically, they don't share much of this revenue with the Ministry of Transport or Public Works. And that makes the treasury transfer unpredictable. So these road funds, basically, it's not necessarily on vehicle taxation, but what are basically how well we use the resources that we have. These road funds sometimes range from funding institutions to implementation agencies. So road funds collect the share of transport-related tax fees, vehicle taxes and time into fiduciary and multi-annual account system. Some road funds can borrow on commercial terms. This is the case of Liberia, right? So there is a system of reform in the fuel taxation. The money is connected in a fund, and the fund can be used as a collateral for commercial financing or concessional financing. But when we talk about most of Ministry of Finance or even our IMF colleagues, they are not so basically happy with road fund because they need basically this revenue to finance the government, to fund the government. Some countries have created fuel funds to finance road investment, not necessarily maintenance, but new assets and public transport. Show that not necessarily all the resources that we can collect, even using distance-based charges, may necessarily go to transport or to basically to pay for the actual maintenance. In some countries, we help to create budget laws for public transport and transport funding. This is the case of Chile and Panama, where basically there is a system where fuel taxes are being used also for the purpose of road maintenance, but also for public transport. Pricing road usage, right, in low middle income countries. So probably this is a topic that we are hearing more often when we talk with governments today, basically what we can do different, right? So we need to be aware that the experience in low middle income countries is limited, only tolling existing few highways, mostly interurban and urban and bridges. In many cases, the revenue are sufficient to pay the capex of those projects. Sometimes they basically be used for other projects. So when taxes are higher, with the fare revenues are higher. But in general, this is not always the case. Toll fares, a different form of distance-based charges. The dynamic fare, particular pricing scheme, has been rising many concerns. So we cannot basically deal with this new sophisticated technology that we can apply. EV and tax fuel collection, which is probably the main topic of today. I'm not covering much because there is very limited experience in the countries that we operate today. It's a concern, it's a discussion that we have with government, but we don't basically move ahead on this discussion, probably because EV penetration is still very low. And government probably, the main reason for decrease in today's fuel tax revenues is economic activity, and is basically cars becoming more efficient, right? So we know that we have discussion on whether we can implement vignettes, or whether a vignette in the way that the form that has been discussed in Australia, but basically not much on this, right? So, and obviously the technology using transponder, GPS-based technology is probably is far away from many of the countries that we work, right? Certainly we have some equity consideration during the transition, right? Because applying this kind of schemes in particular, when there is not good public transport system, for us, it leads to some equity consideration. But basically we welcome this initiative of bringing these distance-based charges, the road usage charge, because maybe it's a good opportunity to cover not only primary, but also secondary and tertiary networks. A few initiatives that we are working today in the bank. I know that this is not specifically, most of them on vehicle taxation, but we are working with the International Maritime Organization, to introduce carbon pricing for maritime shipping. This is a discussion that is making some progress. It's a way basically just to finance the transition to a low carbon mobility. There is a couple of reports that are coming. One, a flagship on the economic of e-mobility, where we are addressing and we are doing some estimation of how much basically will cost to the economy, the reduction on fuel tax collection, and what kind of instrument can be used to cover the impact. We are also working with the London School of Economics, doing a flagship on transport governance and funding solution in the urban space, because we have limited information on that. So we know more or less what the national governments are doing, but at the national level, and for some countries, it's quite relevant, in particular when there is a level of fiscal decentralization of revenues and spending. So we are collecting information, developing a methodology just to basically create a ranking and have a better understanding of how these cities are dealing with public transport funding issues at the level. And as I mentioned, we are working in creating a financial facility to facilitate transport decarbonization. We are focusing at this time in Africa because we think this is an area that we need more support. This facility has basically two windows. One of the windows will focus on the policy side and in particular on the funding side. And this is why the bank is entering slowly into vehicle taxation discussion. And with this, I stop here and I'm please happy to respond to questions. Thank you.